Well, what is going on, guys? Luke here today, and we need to talk about NIO Stock. And guess what? Even if you're not involved with NIO at all, my guess is you have made the same mistakes with another stock, so this information will apply even if you don't have any interest in NIO. Now, this is not an easy conversation to have, but we need to have it because you guys need the truth. So you're going to get some tough love today, but that is why you are here, for the truth and no hype or BS or smoke blowing up your tailpipe or anything else like that. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And are you against having a team of investors, including me, working directly with you on how to value a stock or find great stocks, or even how to raise cash and just navigate this crazy market? If you're not against that, then you need to know this sale ends this weekend to join the Market Insiders private group where you get full and direct access to me and a group of 6- and 7-figure investors, and you get access to 4 courses for free that teach you how to plan, do a valuation, build up your cash, and you get to see my watch list with price targets, my buy and sell alerts. We got live weekly Q&As and more than that coming. We got exclusive videos and a ton more, so check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. All right, so let's get some facts out of the way up front, and don't worry, I will tell you exactly what I am doing, and more importantly, why I am doing it. But here are some simple truths about NIO that many of us who are invested in this stock don't like to hear, but I feel this all needs to be said. Too many of the NIO bulls or the pumpers out there push this stuff and go too far, and it's simply not true. We need to stop trying to make comparisons to Tesla when discussing NIO and instead compare it to stocks that are far more comparable. Now, let me be very clear here. I do personally compare them to Tesla too sometimes as well, especially when I'm making a point about NIO's journey or to show you how a company like Tesla, that, by the way, is light years ahead in terms of maturity of a company when compared to NIO. But basically, if I'm trying to do something like show how if Tesla can trade flat or down for years, it is possible that that happens to NIO too. Or another example would be if Tesla crushes earnings and has record deliveries and profitability, but still trades down afterwards, it probably makes sense that NIO, who does not deliver nearly as many cars and is not profitable, would also trade down after a great earnings too. That to me is the appropriate way to make comparisons to Tesla and my personal opinion. But saying something like Tesla went up 40%, so NIO should too, is honestly kind of laughable. Or another laughable thing is to say NIO should be at a way higher price because Tesla is at 900 and NIO is at only 18, basically speaks to someone who does not understand market cap valuation or stocks in general. And I promise, guys, I'm not trying to be critical. I'm not trying to bash anybody or anything like that. And hopefully if somebody does fall into that category, they dive into those subjects further and learn that stuff because it's super important. And furthermore, on the whole share price talk, any talk about NIO and share price movement when compared to Tesla is still actually flawed a lot because of this next simple fact. NIO can never have the same run Tesla did because it's a Chinese stock. There is a significant Chinese discount, whether it's fair or not. It's absolutely how it works. Oh, you want proof of that? Well, despite this downturn, the most undervalued stock in the stock market, in my opinion, is Alibaba. There is no better deal, and that stock just can't catch any traction. I mean, it's basically like Amazon being on sale for like $500 or $400 or something like that. And trust me, guys, if Amazon was on sale for that, it would be snapped up in a heartbeat by every single investor out there. But on the flip side, Alibaba is a Chinese stock, and in this environment, it will be out of favor for now, which basically leads me to the next truth. Because of everything we just kind of talked about, especially with the Chinese stocks, comparing NIO to Li or Xpeng is a far better comparison than Tesla or even Lucid, to be honest. And the truth is, when I compare NIO to Li or Xpeng, NIO, for the past 2 quarters at least, has not navigated the supply chain challenges as well as those 2 competitors have. Now, whoa, slow down. I'm not saying one is better than the other or anything else like that. I'm just basically saying that the other 2 have executed better in the short term, and I also think there is a reason for it. NIO is pouring capital into projects that the other 2 are not involved with, like NIO Park and others, for example. That will create quarters where the numbers are not as good and will mean resources will go in a different direction than those competitors. But that also means in the short term, NIO will be seen as underperforming regardless of whether that's fair or not. So what am I doing personally? Well, before we even start, let me be very clear. I know many of you guys hate that I say it, but planning and doing a valuation is key to investing. And part of that planning is also understanding the risk of Chinese stocks in general and then mitigating those risks. All of that stuff should be taken into account and planned for before ever buying any stock. Part of my plan that we talked about repeatedly on this channel was that I mitigated the Chinese stock risk by limiting my position size. My Tesla position is way larger than my NIO position, for example, and that does not speak to how I feel about the company nearly as much as it does the fact that NIO is a Chinese stock that I own under the VI structure. So I have to mitigate that risk, and I choose to do it through position size, as we have discussed many times before on this channel. And speaking of valuations, when NIO was at all-time highs this time last year or so, I was warning against buying it because it was simply way overvalued, and I took a lot of heat for saying that at the time. And that was actually before the chip shortage really got ugly and all the other supply chain issues really got backed up, and I still felt it was overvalued. NIO got ahead of itself and got caught up in that hype rally. And I mean, seriously, it happens. It's not NIO's fault, but that is why I wasn't interested in buying at those prices either. This is all just part of the journey of a growth stock. And second, I did not buy NIO stock hoping to 10x my money in a year or even 2 years or 3 years. It was a 3 to 5 year bet on a company that I felt was not directly competing with Tesla in its niche, however the heck you say that, basically in its niche, in a market in China that is going to be the first large nation to convert most of its vehicles to EVs. That is basically the simple premise of my bet, and I wanted exposure to that market. So we are basically a year and a half into a 3 to 5 year journey for a high growth stock. Now, I'm down about 25% or so, but this is not my first rodeo. I have been down 30%, 50% or more in stocks like Apple, for example, back when it was a high growth stock. This is not unusual and part of the journey with these kinds of stocks. So the simple truth is, I'm just holding and seeing how this plays out over the next few years, which was my plan in the first place, and focusing my efforts instead on snapping up some of the ridiculous deals that are out there to buy up. And click this video right here if you want a blueprint to effectively identify and snap up the deals, or click right below it if you want to know which YouTubers I think are the best and their best stock picks. So thanks for watching, and we'll see you in the next one.